Today's ETF battle is a defensive income quant-driven showdown. It's FLSP versus IALT versus QIS. 3 different ways to hunt yield with lower volatility. So which strategy wins? Find out right after this. You're watching ETF Battles. I'm Ron DeLegge. This is our original series, and we are in season 7, rolling strong. Glad you're here. Hit the subscribe button to join the community and drop your ETF battle requests in the comment section below. Give me your exact ETF tickers. We can do double, triple, and quadruple headers. Make it good. Quick reminder, join me live on July 23rd for a webinar titled How to De-Risk Your Portfolio Before the Next Market Downturn. It's free, but space is limited, so lock in your spot now. The registration link is in the description section below. Don't miss it. Now, some of you have pushed back on our ETF matchups, especially when the funds come from totally different categories. I call those nonlinear battles. The truth is we can do both linear and nonlinear matchups, because real world investing is not always neatly sorted into style boxes. Sometimes you have to choose apples versus oranges, and whether it's apples to bananas or oranges to oranges or avocados to avocados or avocados to tomatoes, ETF Battles is here to help you analyze the various choices and make smarter decisions. So today's contest was recommended and suggested by a viewer named Max Penders, who wanted to see today's quant-driven ETF contest. He specifically demanded that Shana be one of the judges. And who am I to argue? It's an alts battle without the queen of alts. Are you kidding me? That's like a family office with no family. I mean, who exactly are we optimizing for? Thank you, Max, for this wonderful ETF suggestion. Joining us, we've got John Davi with Astoria and Shana Sissel with Banríon Capital, 2 of the best in the business. Welcome to ETF Battles. Great to see both of you.
Thank you, Ron. And thank you for recommending me. I love that people now get to the point where they ask for me on these battles.
Yeah, they ask for you. They ask for other judges, so definitely we can accommodate. Today's 4 categories for today's contest are cost, exposure, strategy, performance, and then mystery. Our judges can choose any factor or thing that they think is crucial on the mystery category. They can also nominate wildcard ETFs. I've got scorekeeping duties. We'll mention who the overall winner is at the end of the program. Keep in mind, none of the battle outcomes are ever predetermined or known in advance by myself or our judges. Let's kick things off with the first category, cost. John, please get us started.
Sure. So FLSP is 65 basis points. That's the lowest expense ratio. IALT is 99 basis points. QIS is 1.21%, 121 basis points. So FLSP is the winner. It's important to look at bid offer, like total trading volumes. That's not the only cost that you would incur as a user of these products. I will say that FLSP, for what it provides, that is a very, very low ratio. That feels like a good value. So that's the category winner. I don't think we need to overcomplicate it. The numbers kind of speak for themselves.
Great start. Thank you, John. Shana, how do you see it when it comes to cost?
I agree. As John pointed out, it's more than just the expense ratio. You do want to look at the spreads and the bid ask. And FLSP, it's not the most liquid name of the 3, but even when you add back in the spread cost and everything, it's still cheaper. It's FLSP for me as well.
Next category is exposure strategy. Shana, queen of alts, break it down for us. Help us make sense of it.
All right. So I know this was given as a suggestion as a quant battle in the alt space, but these are all multi-strat funds, and they're all kind of trying to do the same thing, which is have baskets of strategies that are low to no correlation with traditional markets, where they can add alpha in any market condition, and also provide some downside protection. They can fall into, depending on what you're looking at, they could be called multi-strategy, they could be called global macro, they could be called systematic trend, but they all kind of fall into that bucket. So they are quants, but they're all kind of coming at the same idea from just different directions. So I will say, the Franklin Fund is kind of a pure play multi-strat, although oddly enough, not necessarily categorized by everybody as multi-strat. It is in Morningstar. It is focused on style factors of quality, value, momentum, and carry, with carry really driving the risk premia aspect of the fund. So it's split into two different buckets. Risk premia, which is mostly derivatives where they're using swaps to take long and short positions based on macro factors. And then they have their long short equity portfolio where they're actually just doing long short and traditional equity. And in that case, quality, value, and momentum are the style factors they're using in their long short equity bucket. So you have these two different types of strategies. Again, the goal is to provide a multi-asset class solution that has low to no correlation with traditional markets and can ride the ups and downs of the markets for you and provide downside protection. I do want to point out two kind of important things that have that affect this particular product, which is number one, they just fired their sub-advisor. So this fund, up until January, was sub-advised by a firm called K2 Advisors. The fund has a decent track record, so most of it is under the previous management. Now it's internally run at Franklin Templeton. So just food for thought. If you start to see there some things changing a little bit, it's entirely possible it's because of this change. They do have a target vol of 8%, and they have relatively high turnover, just the nature of the beast. If you look at IALT, it's also kind of a multi-strat systematic trend. They're looking, again, to differentiate sources of returns beyond traditional beta. So they use equities, credit, macro. They're looking to take advantage of dispersion of returns, which has widened in recent years since the post-COVID world. So they have, dynamic macro as a bucket, relative value, which is dispersion across individual companies, directional allocation to capture potential market upside. But again, using derivatives. And again, the goal here is to provide low to no correlation return with some sort of downside protection versus the traditional markets. QIS, again, same deal. They take a broader approach. They have, I think they said 35 different strategies in here, and it's all over the place. But they do have a defensive bucket and a carry bucket. And the types of strategies you'll find in QIS can be anything from like a VIX call replication, cross-asset trend CTA, FX cross-sectional carry. They have a Brent versus WTI carry as another example they give. They're looking for structural market inefficiencies versus traditional market beta. And again, same kind of approach, taking all different types of strategies, putting them all together, looking to get this low correlation. In this approach, I would say the one that kind of stands out to me, I really like IALT's approach the most. I do like that it's more of a traditional multi-strat trend following than the other two. We'll get into QIS and the mystery battle category because I think there's some things worth noting in there. But I just think IALT to me is the winner in this category. I think it has the most robust approach, the most thoughtful approach, and it's taking advantage of very clearly what it's looking to achieve is this taking advantage of dispersion of return dynamics. And the others don't really have a very clear vision for exactly what they're trying to arbitrage.
Got it. And as you mentioned there, Shana, FLSP is the one that had the manager change recently,
yes.
Correct?
Mm-hmm. Yes.
Got it.
Okay. But I think Franklin owned K2, so maybe
they
it's
may have, but they did let go of several of the portfolio managers, so that's also included.
Thank you for that added tidbit, Shana. You're up next, John. How do you see it when it comes to exposure strategy?
So for me, from my standpoint, obviously Shana just gave you, a deep rundown. She's the queen of alts. She knows the space really well. One thing I would say is that QIS, sort of like has this issue with, it's down, 30, 50% year to date, 1 year. So, that's a quagmire we got to sort of look into and dive deep into. IAL just feels like very new, right? It was launched, I think December of 2025. Now it has, 4 or 5 billion, but it's probably seeded by BlackRock, went into a model portfolio. I think that's way too short to sort of take anything real seriously. FLSP feels like the most natural to me because Shana said, target a vol, but I see more of like a 5 vol from actually what has actually happened. So, I would sort of lean more on FLSP just because it's been around forever. Actually in the beginning days of it, like I was at Morgan Stanley, we were the swap counterpart. Like it was our strategy. That probably changed. They probably gave it a K2. Sounds like they're giving it to somebody else. But, I sort of had some exposure to it like, 15 years ago. And the fund's been around, for since 2019. So I don't know. To me, it feels like, if you're going to go deep with this stuff, you got to really know the underlying strategies. I think it's way too soon for IAL. QIS just has like a problem at the moment. So I feel like FLSP is the most natural and it's been around for a while, and I would lean on that.
That takes us next to performance, and break it down for us, John. How do these 3 ETFs compare when it comes to the performance category?
So I'm going to leave out the BlackRock one just because it's too new. FLSP year to date is up 2. QIS is down 33. So obviously FLSP is done better this year on a 1-year basis. QIS just has this massive drawdown. It's kind of working through. So I would say, FLSP is just going to win just because of the massive drawdown that we're experiencing in QIS. So whether it's year to date, 1 year, 3 year, it wins quite a bit. Relative to the target vol that FLSP has, I'm sort of comfortable with the returns it's generated. Over a 3-year period, it's up 33%. On a 5 vol, or even if you go on 8 vol, that feels like a decent Sharpe ratio from my standpoint. So I'd give the winner to FLSP.
Shana, you're up next on performance. How do you see it?
Yeah, so as John pointed out, QIS is kind of a train wreck right now. I hate to say that because I love Simplify. They are a big supporter of Banríon, and I love their CTA product, but this product is a absolute train wreck right now. So it's down 55% over the last year. It's down 32% this year. There's really no clear reason. I'm not going to lie and tell you I did this deep dive on the attribution because I didn't. But first, a fund that has 25 strategies and plus in it to be down that much with that much diversification tells me there's something just structurally really messed up about it. And I will note that because I know Simplify so well, I do know that they made some pretty dramatic changes to the way this fund was managed at the end of 2024. So it leads me to wonder if that may have not been the best move. I do have a wild card that I guess I'll just start with now, and then when we get into the mystery category, I'll jump into it. But it is a newer fund. Most of these alt funds are newer, but I really like the All W fund, and I want to also give a shout out. I didn't include it as a wild card because I knew John was going to be on with me, but we use in this type of bucket and the Banríon Wisdom Tree or the Wisdom Tree Banríon Alternative Select model, which if this is really what you're looking to do, just go buy the SMA that I manage at Wisdom Tree because it'll do this for you better. But if I had to choose just one fund, I like John's fund CPI. And I'm also going to throw All W into the mix, which is the Bridgewater, State Street Bridgewater All-Weather ETF, which again is taking a similar approach. And actually has, since its launch, very good performance. It's outperformed all the other ones by a lot. So for me, I'm going to throw those 2 wild cards in there, CPI and All W.
Shana, do you own any of the 3 ETFs that we're debating?
No, I only own yours.
Okay. No, I think that's worth, sort of highlighting, right? Because, you
I don't own any of the ones we're debating. I've looked at QIS, but I own Global Macro and I own some CTA. I don't really need a multi-strat that's doing something like this. So that's why we use CPI.
Yeah, and I think that's worth, sort of talking to telling the listeners, right? Like if none of these are good, as fiduciaries, we should definitely educate them.
Well, yes, and that's a great point. And as Shana pointed out too, this is through, she owns it, just full disclosure, through the Wisdom Tree. Just mention that again, Shana.
The Wisdom Tree Banríon Select Alternative SMA.
Got it.
I think Ron, we got to tell listeners that, hey, alt is something very specific. You need a trusted partner like Shana's firm that's going to help you navigate?
You're selling me when I'm going to touch on that in the mystery category.
Yeah. Well, so yes, we'll get to that. Let's move now to the mystery battle category. Shana, you're still up. So give us your analysis on what your mystery battle category is and which of these ETFs stand out.
Yeah, so as I mentioned, I run an SMA for WisdomTree called the WisdomTree Banríon Alternative Select Model, where we kind of put together what I think are the 5 or 6 best alt funds out there to give you kind of a same idea. I want to provide you diversified exposure with low to no correlation to traditional equity markets to help provide downside protection, but upside participation in the market and diversify your overall portfolio. As I mentioned, in this kind of category of catch-all, trend-following kind of category, we use CPI. I also mentioned AllW also kind of falls into that mix. The 3 funds in this battle, I think, do what they do poorly. One of the reasons why I like Bridgewater's is because Bridgewater has experience in running these types of multi-strat products. I don't know that the products that are being offered here are doing multi-strat well. I think the hedge funds that do multi-strat do it substantially better than these funds do. And if I'm going to have to use an ETF, I want to use somebody that's managed by a asset manager who knows this space, knows how to run it. And Bridgewater is one of the best. So that's how I feel. QIS, like I said, sadly, as much as I like Simplify, this fund is just not successfully doing what they set out to do. I don't think IALT or even FLSP do a great job in what they're trying to do. I just think if you're going to do alts, this is not necessarily one of the categories where there's a lot of strength in the ETF world. So for me, in the mystery category, I'm again throwing CPI and AllW in there. I think they're better products. They're trying to achieve a similar goal. Both of them are trying to take care of like inflation related as well as rising and falling markets, and they both do an excellent job doing it. So we use CPI at Banríon, but AllW being run by Bridgewater and having that cachet, even though it doesn't have a long track record, I assure you Bridgewater is one of the best in the business, and I would trust them more than I would trust the other 3. So that's where I stand with the mystery category.
Thank you, Shana. John, you're up next. Give us your mystery battle category and your ETF winner.
I think, my sort of vantage point for listeners is that if you were going to go into the alts bucket, you really need like a trusted partner like Shana's firm that's going to like help navigate you. Obviously, as you can see here, there's a wide variance of performance and different, sort of like styles for how each of the 3 funds are trying to deliver you alternative exposure. This isn't a space that I would try and do in your own. I would, kind of choose a trusted, manager like Shana that's going to dynamically manage your exposures. At our firm, we actually do use AllW. We had Bridgewater speak at our, annual investor conference. And, they've just been doing this for decades, right? I'm very, I have a close, affiliate, we love Ray Dalio. He's from Queens. I'm from Queens, like Long Island. So he's been doing it for decades, and we trust AllW and we sort of use it. So that's going to be my overall category winner. It's got a good track record. It's got good performance. I sort of know what it's going to do. So I don't really understand QIS's drawdown. I think that's a problem. FLSP is more of lines of like the vol target that, we sort of have, but we use AllW, and I feel like we should talk about the products that we actually use.
All right. So now we move to the part of the program where our judges are giving us their overall battle winner. John, give it to us.
I'm going to go with AllW. Maybe that's what Shana was going to say. Maybe I stole her thunder, but I use it. So I feel like that is what I should talk about. I shouldn't really, recommend the product that we're not using. So
yeah, I'm with John. AllW. Ray Dalio, we all know who he is. He's, the head of Bridgewater, like, of course. I do also want to first correct, I had the ticker wrong for John's fund as PPI. But that's what we use at Banríon. I really like John's fund, PBI. It's done a really, really good job. And it fits kind of where I would slot in one of these. Again, John pointed out QIS's drawdown is so dramatic and also so hard to figure out why. I don't want to invest in something if it's that difficult for me to understand drawdowns. Like, I need to understand how you're going to perform in different market environments. And I shouldn't be surprised. And I have no idea with QIS. So
amen, sister. Well, that we're going to have to
again, for me, it's all W and PPI are my winners of this battle.
We're going to have to leave it there. Our judges have spoken. Today's winner is a split decision between PPI and all W. Look at that. Congratulations, John. You didn't even see that coming. That was a wild card. Both of these ETFs, wild card choices. And our judges did a great job on today's analysis. Hit the description section below. We've got links to both of our judges. And be sure to send me your ETF battle matchups. Do that in the comment section below. Thank you, John and Shana, for doing a great job on today's program.
Thank you.
Thanks, everyone.
I'm Ron DeLegge. We'll see you on the next episode. Thanks for watching ETF Battles.